To start week 9, we are going to be looking at our current assets and all the different items that in detail that may go into current assets, except we're going to kind of skip over inventory since we've looked at that the last 2 weeks. The first thing in current assets is our cash, and we always want to make sure our cash is as up to date as possible. So that's the one reason we perform a bank reconciliation. So the bank reconciliation, the primary, one of the big purposes of it is to figure out why is there a difference, and usually there is, between what the bank statement says as of a certain date, say December 31, and what our cash T account says at that same date. There's a very good chance that those are going to be two different numbers. So the reason why there's two different numbers is because we both know items that the other doesn't. So the company knows some transactions that took place, but the bank doesn't know of them, and we're going to look at what those are. And then the bank knows some things that we don't know as the company. So let's look at the first one here, some items, the two main items that the bank doesn't know about, but we do. The first one here is called deposit in transit. So this is a typical accounting or business type term that you should know after coming out of a class like this. A deposit in transit simply means that you know that you have the money, but either A, you haven't deposited in the bank yet, or B, you did deposit, but it was after the bank's cutoff date or time to make it on that days or that end of month's time frame. So sometimes you may see a little plaque on the bank that says any transaction after 2 p.m. today will show up on the next business day for your bank statement. That would be considered a deposit in transit. And the couple things that I want you to be able to think about when there's a deposit in transit is, okay, I know our two numbers will be different, mine and the bank's, but how will they be different? And who should have a higher amount? Well, if you think about it, it hopefully would make sense that you would have the higher cash amount because you recorded that deposit. However, the bank doesn't know about it. So therefore, your cash should be higher. So that's something that the bank doesn't know, that isn't showing up on their bank statement. The other item is just the opposite of a deposit. It's a check that you wrote that the bank doesn't know. The bank doesn't know about it because, say you wrote it to Best Buy or to your local farmer's market, but that company hasn't cashed the check yet or deposited it into their account. Therefore, the bank has no clue that you wrote a check. But you do. You know you wrote the check. So therefore, you've already taken out of your cash, but it's just not showing up on the bank statement yet. So those are a couple items that the bank will know about, but you won't. So we're going to switch over at this point, and I'm going to bring up our example and how it's going to look in Excel. Actually, I'll bring up this example on, it was number 30. Here it is, and let me pull up, show this in Excel. Here we go. So my opening question here on number 30 is, well, who's actually right in this situation? I get the bank statement, and it says I have a balance of $91.41, whereas my cash T account says, well, I thought I only had $89.37. Who's right? Well, we'll answer that question in just a minute. But the first thing I want us to do is look at how to actually prepare a nice bank reconciliation. So with the bank reconciliation, what I want you to do is to have kind of like a big T account. And so you're going to have a line. I'll start the line here. Kind of a T account, separating out the bank's numbers from our numbers. So what do we think we have as of this date, and what does the bank say we have? Now, if we go back to the transactions, we found out, we looked at the bank statement and we looked at our checkbook or our QuickBooks program, whatever we use, and we found 4 checks that are not showing up on the bank statement. So these are considered outstanding checks. And what I have to think then as I'm preparing the bank rec, how would the bank's numbers be different if they did know about these outstanding checks? Their 9141 would go which way if they did know that I wrote these checks? Hopefully you're thinking they would go down, and that's correct. They would go down. So what I want to do is on the bank side of the bank rec, I want to show, using this as my starting figure, and we're going to pretend that the bank does know about these 4 checks and what would have happened to their number. So I'm going to list each check over here, or what it is, and then each check number. So then next month when I come back, I can easily just look for these 4 checks and see if they have been actually what's called canceled. Canceled means the other company has actually deposited them. So I'm going to look for just these 4 checks, knowing I've already checked the others. No need to recheck it again. And then the other thing I want to update on the bank side is any deposits in transit that I have. And I did find one that I just made today on October 31st for $1,103. And again, I want to think, what would have happened to this bank's original number if they did know about this $1,103 deposit? Well, their number would have went up by that much. And so that's what I want to show here, that the banks, on the bank side, I need to add $1,103 to the bank side of the bank rec, pretending that they did know about it. Okay, now we're going to come back to this and finish up this bank rec in just a minute, but we're going to now look at items that the bank knows, but we don't know. And let's look at 2 at a time, because there's 4 of them. The first 2 items that we know, or the bank knows that we don't know, could be any type of collection that the bank has received on our behalf. If we're a renting type company or a landlord and our tenant just pays the bank and it's automatically put into my account and I never have to go collect the money, that would be an example of a collection. Whereas I don't really know if I have the money yet until I actually go and look at my bank statement. So in that case, this would be a classic example of when the bank's cash is higher than ours. The bank has accepted money for me. The other type is interest income. There's our second type, I should say. This is, again, where the bank's numbers are going to be a little higher. Usually the interest income isn't a lot, but it may be just enough where it's going to make a difference. So interest income is going to be a little higher, or the bank's numbers are going to be higher because I don't know about that. I haven't included it into my cash T account yet. The third one, and hopefully this doesn't happen, but it definitely is out there and it very well could, is a non-sufficient funds check, meaning your client paid you and you thought you were getting money because you assumed that the client had the money in the bank to draw on, but they didn't. When the bank went and cashed the check for you or with the other bank to get the money, the other bank said, this guy doesn't have enough money to pay you. So therefore, you never got the money even though you thought you did. So your numbers are going to be too high. Your cash is going to be too high compared to what really happened. So if our cash is too high, what we need to do is we need to remove some cash plus any fees and add that all back to the client's account receivable. Because we need to take it out of our cash because we don't have that amount. And then if the bank charged us, because that happens, the bank will charge you if you try to deposit a bad check even though you didn't know it was. They will fine you maybe $20, $25. And that's why if you've ever seen it at a restaurant, it'll say if the check bounces, you will be charged a fee of $25 or $30. So we're going to take an example, look at each one of these. And then the last item here in our definite items that the bank knows that we don't is if there's any service charge. Mainly for businesses purposes, usually for individuals it's free checking, but for businesses they do charge. And then the last thing that could go either way, but for our sake, we're always going to assume that it's the company's mistake, is an error. If there's an error, we're going to assume, even though it doesn't happen like this in the real world, but to make sure nobody's confused, we're going to assume it's our mistake. And how are we going to correct it? Using the bank reconciliation and then in our journal entries. The one last item that I need you to be aware of is right here, and I should have made this bold, and I will right now. I actually have a bold but highlighted. Anything that happens on our side of the bank rec, we have to have a journal entry for that. Have to have a journal entry. So let's continue on with our example in Excel now. Okay, the next thing that happened is we had a check written to Davis Company, and it was actually for $523. Now, in our books, we wrote it for $532. So we put too much cash. We took too much out of the cash. What I like to do in these instances is I like to make a little tiny cash T account. It's not the actual cash T account by any means. Just a real basic one here. And what I want to do is I want to show what did I record happen, what should the amount have been, and then what do I need to do as a correcting entry, because this would be a perfect example of a correcting entry. What do I need to do to make it all right? So I originally recorded this as 532. This was my original. Now I'm going to draw a total line down one. And the actual answer should have been 523. So what do I need to do as a correcting entry to get from where I am to where I should be? And hopefully if you look at this, you see a negative 532 come down to a negative 523. To get me to the right spot, I need to add $9. And again, this is just for my visual purposes. This is not my journal entry. This is not my actual cash T account. This is just for me to visualize what needs to happen. And my entry needs to be a $9 addition to my cash. It's on the debit side. So that's the first thing that I would show here is I had an error. And then I would put, I'd like to put here the check number, check 201. Oops. And I need to show this as a positive $9, definitely not a negative. And then I come down to the bottom, and let me show you here. I need to show that, yep, I'm putting the cash back on my books. Doing these journal entries is just as important as doing the bank statement. Because if I just do, or the bank reconciliation, if I just do the bank reconciliation, but then ultimately don't update, go back and change my errors or any other items that the bank knows, then it's kind of silly to even do a bank rec. I need to get my books up to date. So I debited my cash to put the cash back on the books, and I need to credit Davis's AP because I really owe him $9 extra that I showed that I paid, but I really didn't. Number 4 here, this one's pretty easy. We had a bank service charge of $6. So I'll first go ahead and just show the journal entry. We had a bank expense. I'll just call it a bank expense for lack of a better term. The bank provided us a service. It was good for just this month, so that means it's an expense. It's debited $6. And I need to show that I lost cash of $6 as a credit to my cash. Now I can then go up and show how this affects my bank rec. And I show this as a negative. I had a bank service charge and I'm losing $6 because of that. Okay, the third item on our books, well, we have a non-sufficient funds. What I like to do with non-sufficient funds to give an overview of what happened in the past is, let's pretend, so if we're in October 31, let's pretend back on October 10th is when I received this check from my customer. And if I received the check from my customer on October 10th, I would have been assuming that I got $125. And then I would have taken that $125 and say, where did it come from? Well, it came from Scott's account. He no longer owes me that $125. And that would have been my journal entry. So again, I'm assuming that this has already taken place, this transaction. Now what I really need to do, though, is make a correcting entry because Scott was not so good. And then on October 31st, when I found on the bank statement, he actually never did pay me because his bank account was overdrawn. So what I'm going to have to end up doing in my journal entries is reversing this. And not only reversing the $125, I'm going to tack on another $25 fee. The bank is charging me, taking $25 out of my account. Now it's not my fault, so therefore I'm going to charge the customer that $25, which eliminates any expense on my part. It's kind of like an FOB shipping point fee. Yeah, the UPS is going to charge you, but due to your terms, it's the customer who's really footing the bill, even though you're making the actual payment. So let's see what happens then. We'll do the bank rec first. Remember, there's always two things we do on the bank rec when it's on our side. The first thing I need to show is, and I need to update this, is this is actually $150 because we had the penalty, plus we had the actual amount, the $125. And then I need to go down and I need to show that I'm adding back onto Scott's bill $150. And I need to take away from my cash the $150 because I really don't have it. My cash G account needs to go down. The last thing that I show here is a $20 withdrawal that was not recorded in our books. So the owner took some money out, wrote a check to himself, or whatever. Yeah. In most cases here, this would have been a check to ourselves. So we needed some cash real quick. So we wrote a check. We forgot to notate it in the books. So we need to make a journal entry showing that the owner took money out, putting an additional $20 in the drawing, and then 20 coming out of our cash. And then coming up here, and I called this an omission. You could have said omission-drawing if it would have helped. And putting that $20 right here as a negative because my cash went down. Now, since I changed this $150, there's a good chance I'm going to have to change one of my checks up here. One of these checks is probably not, I probably have changed it since my original making of this a couple years ago when I made this, and now I've updated it. I forgot to update it on my answers here. So let's check my outstanding checks. I had 461 and 119. Let's see which one's wrong. 461, 119. Oh, it might be even my beginning number here, 9141. Yep, it is my beginning number. This number should be updated to 9141. So now, the whole purpose of doing bank rec is two things. One, like a trial balance, do the two ending balances now that both sides know as much as they can. Do our cash balances equal, and they should. That's purpose number one. Purpose number two for doing the bank rec is we need to update our books with any correcting entries, any items that the bank knows about that we don't, like a bank fee, for example. What we're going to do then in class is we're going to go through the actual, more realistic bank rec. That's number 31, and I'm going to kind of help explain what to do for that example. So we're going to stop the video here for this bank rec. Our next video will look at the petty cash fund and the change fund. And then our final segment for this week will look at the account receivables and interest.